Hey everyone, welcome. Welcome to the stock exchange. I'm not sure if that's the right translation, maybe commodities exchange would be better. So that's what this building was. There's a poem on the clock tower, about the clock tower. One line is this line here, which I'm not going to attempt to pronounce the Dutch, but one translation of that is stand firm, just like me, just like the tower, for as long as it takes, which I think is a nice availability slogan. So the author, the poet Albert Fairway, clearly knew a thing or two about availability. So this is what I'm going to talk about today. I'd like this to be a conversation because I can tell you about some stuff that started to happen here, but I certainly don't know the answers to it. So please do stack up your questions and comments, put them in the Slack channel or raise your hand at the end and we'll start having that conversation. Really long title, sorry about that. Couldn't think of a clever or witty alternative, but it is a fairly good summary of what I'm going to talk about. Let's dive a little bit deeper into that summary view. So, new legal powers are coming for financial regulators around the world. New laws are being written and passed now. Financial regulators are being given powers to regulate the critical cloud service providers. And I think we all know who that's going to include. The things on which they will enforce those standards are absolutely central to the SRE discipline. So things like availability and uptime. The regulators have discovered that the things we care about are things they ought to care about as well. Cloud service providers could face large fines or even being barred from the market if they fail to meet the required standards. And we, the SRE discipline, will need to successfully collaborate with risk and compliance disciplines from the finance field. We need to represent to the regulators the SRE way of doing things and how effective it can be. So that was the very quick summary. In more detail, today I'm going to talk about myself, the perspective from which I'm looking at this, the new laws that are being passed at the moment, the possible impact on cloud service providers, so what, who cares, and how can we contribute to that conversation? Let's start with me, a quick summary of the perspective that I'm bringing, so where I'm coming from on this. I've got a tech industry background. I've worked in tech since 1999. I've founded a couple of my own startups. I've worked for scale-ups. I've worked for big tech companies. I haven't included their logos on here because I haven't got permission, but Facebook and Amazon for a couple of years each. And I'm in the UK, so what you'll get from me is a UK perspective, a little bit of a European perspective as well, not so much about America because that's not closely related to my work at Monzo at the moment. I'm new to fintech. I'm a baby in finance terms. The world of tech is more familiar to me. But I'm discovering that the finance and banking world is suddenly alive to the importance of SRE concerns, although they don't call them that. So, coming from Basel, we've got the Principles for Operational Resilience, coming out of the Basel Committee on Banking Supervision. For the EU here, we've got a proposal for regulation. And this one here is discussion paper 322, published by the Bank of England about a month ago on operational resilience. So they've really noticed that this stuff is a big deal, which is good, because it is. The importance of these new rules are backed by the regulators wielding big sticks, such as fines or bans. They are going to have some sweeping powers here. And congratulations, we're going to be regulated. This is a new thing for the finance world. These new rules, new laws are coming in now. Some are already live, so at Monzo we've started doing this now. Some are being passed by legislators now, others are in the planning stages. A little caveat, a little warning, a lot of what I'm talking about today hasn't been implemented yet. So what you're getting is my best guess of how it might be implemented. It could play out differently from what I'm going to suggest today. So let's get into detail about the new laws that are being passed. There's a global push for regulators to improve the operational resilience, is the term they use. They mean uptime and availability of the financial sector's consumer-facing software systems. This push is coming from global regulatory organisations such as the Financial Stability Board, which exists to promote financial stability, obviously, and the Basel Committee on Banking Supervision, which is the primary global standard setter for the prudential regulation of banks, in their own words. We should expect global regulatory alignment. And what they mean by that is all the large financial regulators to end up with similar laws and regulatory regimes on operational resilience. So the international organisations of which each of the national regulators is a part are helping them all work together to have broadly similar rules. Why are they introducing these new laws? They want to prevent instability in national and global financial markets, which can be caused by IT failures in individual financial institutions, or even worse, in common systems used by many financial institutions. This image here is police keeping order during a run on the Adolf Mandel Bank in New York's Lower East Side on February the 16th, 1912. And it looks sort of oldie-worldy and almost funny. I like the kids who are looking at the photographer while everyone else rushes around. But actually this is, I mean, at the time I was really serious. You can see the police officers, the people with the buttons, keeping order to prevent there from being a riot because those people wanted their money and some of them weren't going to get it. We've got some trades and industries up on the walls here in the mosaics. There's some people mining coal, there's some people ploughing a field. None of those industries can function effectively without a working financial system, and things go really bad if you screw it up, as we've discovered in the UK over the past couple of weeks. So, preventing financial meltdowns is obviously a good thing. It's good that the regulators have noticed that this stuff is important. They're right to recognise that availability is feature zero. Concentration risk, as they call it, is real and it's growing. A large proportion of UK finance firms that are using cloud computing, and pretty much all of us are either on the cloud or planning to be on it, are using the three main cloud service providers. So AWS, GCP and Azure. A serious problem with any one of these three could cause systemic impact on financial markets. Individual financial institutions are not in a position to deal with the systemic risk. It's good that regulators are doing so. And I should say, this risk, it's a remote risk. I'm not saying I think AWS is going to fail or GCP or Azure, and this is the conversation we've been having with the regulators. We've been quantifying exactly how remote that risk is for them numerically. It's very unlikely. And they've been saying we've got to be ready for it anyway. And I think they're right, because it's a black swan sort of risk. It's very unlikely, or it appears very unlikely, but the impact would be extremely large if we simultaneously lost function for a bunch of UK financial institutions all at the same time and didn't get it back quickly. That would cause effects in the market. And it would cause effects in people's lives as well. If you can't get paid, if you can't pay your rent, if you can't buy your groceries, those are what we call important business services, and they really are important. It's like the people on the street in New York. If you can't get money, that is a blocker to everyday life. So this is how the Bank of England phrased it earlier this year. This is from one of their documents. Increasing reliance on these cloud service providers could increase financial stability risk in the absence of greater direct regulatory oversight of the resilience of these services they provide. So what they mean by direct regulatory oversight is At the moment, the regulator regulates the banks, like Monzo, and the banks talk to the cloud service providers, and the cloud service providers also talk to the regulator, but it's the banks that are the regulated entity. Soon the regulator will be able to directly tell the cloud service providers what to do. A little digression, a worst case scenario in terms of failure is a domino effect in which failure of one cloud service provider causes a capacity crunch in other cloud service providers, which could lead to instability across the industry or a lack of capacity for data recovery. So, legislative bodies are passing new laws now, imposing operational resilience obligations on systematically important vendors such as key cloud service providers. One of those laws in the EU is DORA, the Digital Operational Resilience Act. Provisional agreement on that was reached on the 11th of May 2022. In the UK, it's the Financial Services and Markets Bill, which I was told should get some time in Parliament this year. I don't know if it will now. They're trying to fit it in. So some of the things they say about it. The financial regulators will have a suite of statutory powers, including the power to direct critical third parties to take or refrain from taking specific actions, and enforcement powers, including a power to publicise failings and, as a last resort, to prohibit a critical third party from providing future services or continuing to provide services. So this is what the draft law looks like. They have a range of criteria for what will constitute a critical third party. How important are they to the finance industry? How big is the concentration risk? It would be astonishing to me if the three main cloud service providers did not get designated as critical third parties. And the regulator, if it thinks it's necessary or expedient, may direct those critical third parties to do anything or to refrain from, to not do anything, if they think it's necessary and as a last resort. Would the critical third parties, the cloud service providers, need to do what they were told there? Could they just ignore it? If they don't do what the regulator says, essentially, these are the disciplinary measures that can be applied, prohibiting them from being in the financial market, prohibiting anyone from receiving services from them in the financial market, all kinds of bad things. So these instructions from the regulator, if they do come, it'll be important to follow them. So that's the kind of thing that's being passed into law. Let's look at the impact of that on cloud service providers. Again, a caveat, these are just my best guesses. It's far from clear how this will turn out. The cloud service providers are actively lobbying the regulators at the moment on what this will look like, so these are just broad brushstrokes. Here's what I think will probably happen. The regulators will set resilience standards for the provision of cloud computing services to financial institutions by critical third parties. Little digression, this may produce an incentive for cloud service providers to separate out a division or a particular kind of service for the financial sector in order to limit the amount of their operations that are in scope for the regulators. So we've asked the regulators, does this mean you'll be regulating the whole of AWS, for example? They've said, no, we'll only regulate the services that you use, but we use EC2, we use, the mainstream AWS services. So perhaps there might be an incentive for the cloud service providers to have a specifically finance industry version of some of their services to keep the main part outside the regulatory perimeter. Regulators most likely will have the ability to test cloud service providers against those resilience standards, using a combination of external assessment, such as certification by third parties, and internal assessment, robust internal processes of which the regulator has clear visibility. So don't be surprised if in a few years' time The regulator is asking to know how the game day went. What were the results? What were the problems? What did you do about it? Regulators will have the legal right to insist that cloud service providers, which are providing service to financial institutions and which are big enough to be critical third parties, take or refrain from taking specific actions. They will have the ability to bar from the market cloud service providers that are critical third parties who don't meet the required standards or are insufficiently responsive to regulatory requests and instructions. So if the cloud service provider were to just ignore the regulator and say, no, I won't give you information, they could be subject to this sort of discipline. Fines are also a possibility. So the regulator is saying this would be an absolute last resort. And I think it would be. I don't think this is something that they would do lightly. But I think even the fact that they have this power would mean that any large company basically is going to comply with what they say. I don't think they would ever need to do this. So what? What does that mean for us? Why am I talking about it here? I think the SRE discipline has a lot to contribute here because this is an area that we know a lot about. We know how to measure it. We know how to improve it. I think that we have a lot to lose if these new laws are implemented in a way that's counterproductive in terms of real-world outcomes for consumers. So I think there's a risk here that we will end up with a whole lot of bureaucratic checklists and tick boxes and prescribed ways of doing things which don't actually make resilience any better. And I think if we can get the SRE way of doing things to be the approved way of doing things, the good practice recognised by the regulators, then hopefully we can avoid this scenario. What can we contribute as a discipline? We know all about defining standards of operational resilience, although in fact I think the other session that's happening right now is talking about that, and I'm a little bit sad to miss it, but at least we have the talks. We know something about it, we develop our understanding. We have established best practices for doing it. We should share our best practices with the regulators and help to frame how standards of operational resilience are defined and tested. Secondly, we're well placed to be part of the conversation on what regulators should actually instruct cloud service providers to do and not to do in order to mitigate concentration risk at an operational level. So the regulators have the power to tell the cloud, will have the power to tell the cloud service providers what to do, but the regulators are not technology experts and at the moment don't actually know what the cloud service providers should be doing. For example, we might want to suggest to the regulators that the cloud service providers prioritize financial infrastructure and other key infrastructure like healthcare and transport over Netflix or World of Warcraft in an emergency. We can contribute, I think, by improving our collaboration with colleagues in risk and compliance and legal and regulatory circles, both operationally, dealing with the current regulatory regime, and lobbying, influencing the future regulatory regime. So if you're someone who works at AWS or GCP or Azure, then you have colleagues in policy teams who know about this stuff, and I know because I've talked to some of them about it. They may not be talking to you yet. If they're not, I suggest striking up a conversation. And I'm open to conversations and ideas on what our next steps should be, because I don't want to see SRE turn into that kind of bureaucratic checklist nightmare. Existing trade bodies and professional associations might be a good place to start, so there may be ways for us collectively to say to the regulators, this is what we suggest good practice looks like. So, key takeaways. First, the stability of national and even global financial markets increasingly depends on the resilience of a small number of cloud service providers in a small number of regions. AWS Ireland is a particular hotspot, I think. Second, SRE is becoming massively important in the finance sector, although using different vocabulary. And financial regulators are getting legal powers to enforce effective practice on the cloud service providers, AWS, GCP, and Azure. And third, there are people in risk and compliance roles within the finance sector who are trying to achieve similar aims as SREs, but they speak a totally different language from us, and they have very different methods to us. We would benefit from improving our collaboration with them. So one of the things we've been doing in Monzo is trying to build relationships between software engineering and SRE on the one hand, and risk and compliance on the other hand. And that can be as simple as some excuse for a meeting and then going out to the pub and have an activity together and just build personal relationships. So that's it from me, really.